So, the artificial intelligence market has just, well, exploded, hasn't it?
It really has. It feels incredibly like the early internet boom.
Yeah, exactly. And honestly, it still feels like we're just, getting started. We've seen companies, AI-focused ones, hitting multi-trillion-dollar market caps. I mean, that was once just unimaginable.
Truly, the scale is something else.
Okay, so today we're doing a deep dive into what our sources are calling the undisputed AI chip king.
Nvidia.
You got it. A company that seems almost invincible, right? And it's now nearing a $4 trillion market cap. Just staggering.
Incredible numbers.
So we'll unpack why Wall Street analysts are so bullish, look at some of the unexpected challenges they've actually faced, and maybe where their future might lead.
Right. And our mission for you today is really to cut through all the noise, look at the data, and help you understand what makes this company such a, well, dominant force in this AI revolution.
Yeah, and what it means bigger picture, right, for the whole tech landscape.
Exactly. To give you a solid grasp of where they stand and their potential going forward.
Okay, let's get into it then. Our sources, they consistently highlight NVIDIA as the AI chip king and also the ultimate pick and shovel play for AI.
That pick and shovel analogy is perfect, isn't it? They sell the essential tools, the hardware that everyone else needs to, mine for that digital gold.
It doesn't matter who finds the Goldmine app, they're selling the gear.
Precisely. Whether it's the latest AI model or massive data centers.
And it's truly remarkable. As of, July 7th, it became the largest publicly traded company at $3.86 trillion market cap.
Just overtook the other giants.
Yeah. And get this. One analyst we saw thinks it could hit over $6 trillion soon.
Wow. $6 trillion. That's a huge projection. But it really does underscore their foundational role, doesn't it?
It seems like it.
What's fascinating to me is just how quickly they've managed to consolidate this position. You see challenges pop up, but the stock, it doesn't really stumble for long.
Right. It bounces back fast.
Which reflects, I think, not just market strength, but how deeply integrated they are. They provide that essential hardware, the GPUs mainly, that power pretty much everything in AI.
You hear dominant position, you might think it's been totally smooth sailing for them.
You might, yeah.
But what I found really interesting in the sources is that, well, despite looking invincible, NVIDIA has faced some pretty serious headwinds just this year.
Oh, absolutely. It hasn't been entirely smooth. Remember the scare from that Chinese company, DeepSeek?
Ah, yes. They supposedly developed an AI chatbot that could rival OpenAI's ChatGPT, but, at a fraction of the cost.
That was the initial claim, yeah.
Yeah.
Big headlines for a bit. But then it kind of came out that the cost savings comparison wasn't quite apples to apples.
Okay.
Different training methods, maybe some underestimated resource use. So the challenge, while noted, perhaps wasn't as direct or immediate as it first seemed.
Gotcha. So less of a direct threat than initially reported.
Seems that way. But still a reminder that competition's always lurking.
And then, adding to those market worries, there was the whole regulatory situation, too.
Right. The Trump administration launched those pretty wide-ranging tariffs and export restrictions on certain Nvidia chips.
Which directly threatened their ability to sell into China, right? That's a massive market for them.
Huge market. Historically, a very significant chunk of their revenue. So yeah, that was and still is a serious challenge to navigate.
And weren't there also concerns, sort of ongoing whispers about big players like Google and Amazon developing their own custom AI chips, trying to reduce their reliance on NVIDIA?
Yes, absolutely. That's been a recurring theme. Google has its TPUs, Amazon has Trainium and Inferentia. But here's the thing.
What's that?
NVIDIA's advantage isn't just the chip hardware. It's their whole software ecosystem, especially CUDA. That platform is so entrenched. So many developers build on it.
Ah, so it creates a kind of lock-in effect.
Exactly. It's a powerful moat. Makes it really hard and expensive for others to switch away, even with their own silicon. That's a key part of their resilience.
That makes sense, which I guess is a perfect lead-in then. Because despite these challenges, competition, regulations, internal efforts by giants, NVIDIA's stock is still up nearly 15% this year.
Incredible, isn't it?
So this brings us to the bull case. What are the analysts seeing that makes them predict even more growth? What's fueling this really ambitious future view?
Well, if you connect the dots, Wall Street's confidence is, frankly, soaring. Our sources point to Loop Capital analyst Ananda Barua. He's become one of NVIDIA's biggest bulls.
Okay.
In late June, he issued a $250 price target. And that implies, as you said, a market cap over $6 trillion.
So what's the driver for that next leg higher, according to him?
He sees it being fueled by even more intense spending from the hyperscalers, the big cloud guys like Amazon, Microsoft, Google.
Right, the ones building the massive cloud infrastructure.
Exactly. They need unbelievable amounts of computing power for their services, and especially for their own AI development. Barua thinks they're poised to massively increase their AI-related infrastructure from maybe 15% of their total infrastructure now to over 50% by 2028.
Wow, that's a huge shift.
It is. And that would significantly boost demand for NVIDIA's GPUs and their accelerators.
And it's not just those hyperscalers, right? Barua also mentioned rising AI factory demand. What exactly are those?
Think of them as, enormous purpose-built data centers, specifically designed and optimized just to train and run the most complex AI models imaginable. They require immense power, immense processing.
Okay, like dedicated AI powerhouses.
Pretty much. And our sources suggest that spending on AI accelerators in generative AI could rise by a staggering $2 trillion by 2028.
$2 trillion?
Yeah, the sheer energy demand, the gigawatt demand for these AI factories alone could create a pipeline for NVIDIA worth, get this, $450 billion to $900 billion over the next few years.
That's hard to even comprehend.
It is. And as AI models get more sophisticated, especially doing more complex reasoning tasks, that's going to drive server spending even higher.
So Baru's actually put numbers on this. What's his forecast for their data center revenue?
He's modeling for it to more than double. From about $115 billion now to $367 billion by their fiscal year 2028.
More than doubling an already huge number.
And he emphasizes that NVIDIA remains essentially a monopoly for critical tech.
Monopoly? That's a strong word, especially in tech.
It is a strong word.
Yeah.
It may be technically not a pure monopoly, but
they have that kind of dominance.
They do. And again, what allows them to keep that dominant hold, it's not just the chips themselves, it's that whole CDA software ecosystem we mentioned.
Right, the platform.
It's the whole package, the infrastructure, the software tools, the developer community. It makes it incredibly difficult and costly for competitors to truly catch up. That's where their enduring pricing power, market leadership really come from.
Okay, so chips are clearly the core, the engine of all this growth. But NVIDIA's ambitions seem to stretch even further, don't they? Into some potentially huge new markets.
They do. And this next area, their robotics efforts, is really fascinating and could, reshape their whole long-term story.
Yeah, I saw they recently released a new humanoid robot called AEON. It seems to be getting more attention now.
That's right, AEON. And what's really interesting here is the vision of their CEO, Jensen Huang.
What's he saying?
He's called humanoid robots the kind that could potentially, do household chores or work in warehouses, possibly one of the largest industries ever.
Wow, that's ambitious.
Extremely. But it shows they're thinking beyond just providing the silicon. They want to enable these broader AI applications in the physical world.
So it's strategic diversification.
Definitely. Into potentially enormous new frontiers.
Yeah.
Analysts are already projecting, I think it was a 344% rise in revenue in NVIDIA's robotics and auto division by the early 2030s.
344%. So moving beyond just chips to enabling AI everywhere.
That seems to be the vision, yes. Tangible, physical forms powered by their tech.
Well, with all that potential, it's maybe no surprise Wall Street is so bullish. I mean, look at the returns. NVIDIA has returned an astonishing 1,420% over the last 5 years alone.
Just incredible performance for shareholders.
So our sources, they generally suggest investors can, quote, certainly buy the stock. The reasoning is that it's still early innings for AI, and NVIDIA will be difficult to dethrone.
And that logic makes sense, given everything we've discussed. Their market leadership, the growth trajectory.
Well, there's always a but, right?
There usually is, especially with investing. While the future looks bright, and they clearly have significant pricing power, we absolutely have to consider the valuation perspective.
Okay, so what's the picture there?
Well, NVIDIA trades at around 37 times forward earnings. Now, that's above its 5-year average, which is roughly 34.3 times.
So historically speaking,
the stock is not cheap. It's pricing in a lot of that future growth already.
Not cheap. Yeah, that's definitely something investors need to wrestle with, balancing that amazing growth story with the current price tag.
Exactly. And our sources also highlight some lingering concerns. One is about the company potentially over-earning.
Meaning what, exactly?
Essentially, critics worry they might be charging such a high premium for their chips right now that it might not be sustainable long term. If competition does eventually intensify, or the market dynamics shift, they might not be able to command those same prices.
Okay, so margin pressure could be a future risk.
It's a potential risk, yes. And that China regulatory environment we talked about, that remains a, quote, sore spot. It's an ongoing uncertainty.
Right.
Plus, you have to remember that some of those longer-term projections, like the 3-year forecasts for AI data center spending and AI factory demand.
The multi-trillion-dollar figures.
Yeah. They are largely characterized in the sources as conjecture, meaning they involve a significant amount of estimation and looking into a crystal ball. They aren't guaranteed outcomes.
Fair point. Lots of assumptions baked in. So given this high valuation, the fact the market's near all-time highs, what's the sort of practical takeaway for you, the listener, if you're considering this stock?
Well, given the potential for volatility, even for a dominant leader like Nvidia, one strategy suggested by the source is dollar cost averaging.
Explain that quickly.
It just means investing a fixed amount of money at regular intervals, say monthly or quarterly, regardless of what the stock price is doing at that moment.
So you buy more shares when the price is lower, fewer when it's higher.
Exactly. It helps average out your purchase price over time and mitigates the risk of putting all your money in right before a potential big sell-off, especially if overall market sentiment takes a hit. It's a way to participate without trying to perfectly time the peaks and valleys.
Makes sense. A more disciplined approach, maybe.
Could be for some investors facing these valuations.
Okay, so we've really navigated quite a bit here. Nvidia's remarkable rise, its surprising resilience against some real challenges, and these incredibly ambitious future plans from AI factories all the way to humanoid robots. Hopefully, you now have a much more solid foundation for understanding why this company commands so much attention and what makes it such a, well, unique force in the market right now.
Absolutely. So maybe here's a final thought for you to sort of mull over as we wrap up. If one company holds such a dominant, almost as Burrow put it, monopolistic position in the core technology, the foundational tech for an industry that everyone agrees is going to grow by trillions, what are the long-term implications of that?
Good question. Implications for what?
Well, for competition, obviously, but also for innovation across the board, and maybe even for broader economic structures as we move deeper into this AI-powered future. Something to think about?